Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday the 3rd of February, ending Friday the 7th, 2020. Welcome to February. The statements for January have now printed, and they weren't great. If you look at it, now where did January open? The opening price for January was 32.37, and we closed at 32.27. So the month is negative, and it's a big up. We'll look at the monthly charts here in a minute. Daily chart looks like this. This is the ES. Obviously, on the daily, we got a 13 sell signal back in the middle of the month, and obviously that's starting to play out now. We've already touched a red static trend line, but that red static trend line actually was formed after the 13. That was that new 9-bar count that you see that ended after that. The red static trend line that should be in place from the 13 signal itself starts at that prior 9-bar startup phase, which is back near 31.10 or so. So just keep that in mind. Let's go through the daily charts, and then we'll look at the intra-week action, and then we'll talk about what's coming. So crude oil, maybe the saving grace here, down 51 cents, almost to 51.63, almost to the lows of the last year. Matter of fact, any chart like this, you would look at, no, this is a breakdown, right? This is about to get crushed. That's not a bad thing for the economy when everything else looks pretty ugly. We've got inverted yield curve again, and problems out of China and all these other things, and really bad GDP number for last year total, nowhere near what they were targeting. So, I mean, this is not good, but at least oil being down helps out. Gold up $4.20. That's near highs. That's not great. S&P cash, obviously the same as the futures here, so we won't get into that one. Nasdaq 100 was down $144.58.58. 144 points. It did manage to get a 13 seeker sell signal this week with that one-day move up, which is interesting. And then we've rolled over now. So that red static trend line is an actual trend line for the 13 sell signal, meaning it's the target, just under 8,400 on the daily chart. SOX down 65.87, also had that 13 sell signal. And look at that risk line. You can't make that up. Hit it, obviously didn't close above it, didn't even come close, and then rolled. And this thing's on its way as well. Biotech's down 56.96, no signals there. The Russell 2000 down 34, didn't ever get to a 13 there, but it started selling off more sharply quickly. Also had a negative month to start the year. VIX up $3.35 to 1884. It did hit 20 intraday, so starting to get exciting again on the VIX. But remember, just starting. I mean, this is only a couple days in to this move. The trend 2.22. Puts the 10-day moving average at 1.45. Nasdaq volume on Friday, 2.7 billion. Really strong, strongest day of the year. The down days have been heavy volume. The up days have been light volume for the most part. That's never good. Advanced decline ratio on the Nasdaq negative 1660, but several days this week negative. One big day up, several days down. Look at that moving average approaching the lows. The 10-day moving average negative 630 on the advanced decline ratio. That's almost the worst it's been in a while. Advanced decline ratio in the New York also hitting about the worst it's been in a while. The moving average at negative 371. The total number on Friday was negative 1641. Google loses $21.47. An outside day down on Google. Apple down 14.36. Biggest range day on Apple, I think in the last year almost, looks like. And it was negative across the board, of course. Netflix down $2.65. Remember, that's after Apple had a good earnings set this week. Amazon had earnings Thursday. They were very positive, gapped up huge to all-time highs, actually broke over 2,000 and had, but then came back in and closed just over 2,000 on the session. So it's still a big positive day, but obviously a sell-off from the open. Tesla was up $9.76. Oh, the poor shorts on Tesla. They are just getting hosed. The stock was at 200 back in June. Facebook down $7.62. Goldman Sachs loses $6.38. TLT, the 20-year bond ETF, up $1.32. The Dow Jones loses 603. Again, a negative month on the Dow to start off 2020. All right, let's also go look at the monthly charts before we look at the intra-week action, because this is important. We've been talking about this for a while. We got the 13 sell signal back in October. November, December were up, but they stayed under the risk line. And that risk line was at 32.55. So remember how this works. The 13 sell signal is in place unless you close above the risk line 1 month and then take out the high of that candle the next month. So that was why the battle was so important this last week. We kept talking about it. And by the close on Thursday, it looked like we might stay above 32.55 because we rallied hard late Thursday. But by the close on Friday and all day Friday, it did not look likely. And we ended up closing 30 points below it. So that risk line is still intact on the 13 sell signal. On the monthly time frame, remember, this is a much bigger time frame than that daily signal we already looked at. And obviously the NDX and the S&P, or the ES and the SOX, all had 13 sell signals on the daily. But this is the bigger one. This is more important because the static trend line, the target of this 13 sell signal is that red line down at 2,000. That's 33% down on the S&P from here. So keep that in mind. That is a Mongo sell signal. We've been monitoring that, and it is a big deal, no doubt about it. All right, in terms of the intra-week action, let's go to 10-minute candles on the ES first. Kind of a wild ride. Gap down on Monday, and Monday was pretty flat, honestly. Not super exciting. Closed just above where we opened. Tuesday gapped up and did push higher. Wednesday gapped up a little, filled the gap quickly. We never got back to last Friday's close. Came close middle of the day Wednesday. Ended up closing slightly down from where we opened on Wednesday at the close. Thursday gap down, and we wiggled all over the place, man. That was a crazy day. It was a drop, and then a rally back near the highs, and then another drop, and then late in the day a super rally that filled that day's gap and actually closed green for the day, which was kind of surprising. Then we had the Amazon earnings. So the Amazon rumors, I think, is what drove that. And then on Friday, we gapped down a little bit and just kept heading lower and closed at the lows of the week. When we look at the Nasdaq side, pretty much the same story, except for we did fill the gap from the prior week. So there's no gaps left. We also gapped up a little bit on the Nasdaq on Friday instead of gapping down because of Amazon, of course. So all the gaps from this week are filled. We didn't quite close at the lows of the week like we did on the ES, but we certainly closed negative and down late in the week. So obviously, none of this is looking positive for the market. I think the bulls are not in charge at the moment and probably haven't been for most of the month. And we'll see what that leads to. In terms of economic data coming out this week, there is quite a bit. We got the final manufacturing PMI at 9:45 a.m. Eastern Time on Monday. ISM manufacturing and construction spending at 10. Loan officer survey at some point during the day. Ward's total vehicle sales at some point during the day. Tuesday, factory orders at 10, and the TIP economic optimism number at some point during the day. Wednesday, there's a bunch. ADP non-farm employment change at 8:15. Trade balance at 8:30. Final services PMI at 9:45. ISM non-manufacturing PMI at 10. Crude oil inventories at 10:30. So that trade balance number can be decent, obviously. Thursday, also watch those ADP non-farm employment change. That's an important number as well. Thursday, Challenger job cuts at 7:30. Preliminary non-farm productivity and preliminary unit labor costs, and the weekly initial and continuing jobless claims numbers at 8:30. Natty gas at 10:30. And on Friday, non-farm employment change, unemployment rate an hour before the bell. Final wholesale inventories 30 minutes in, and consumer credit at 3. So keep in mind we've got the inverted yield curve as well. I mean, there's just a lot going on right now, and it's going to get interesting for trading stocks for sure. Charts as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week and good luck.